Welcome to your first investment property in British Columbia, a strategic guide for women. This guide aims to take you from contemplation to closing your first deal within 12 months, offering clear numbers and community support. This guide is designed for educational purposes, providing insights into the British Columbia market, deal analysis, financing, and more. Remember, real estate investing carries risks, so consult professionals before making decisions. Now let's dive in. Many women face fears around real estate investing, like losing savings, feeling unprepared, and worrying about timing the market. Yet women are still excelling in this field. This guide provides the structure and support needed to overcome these fears and succeed. Remember, you're not behind, you're just getting started. British Columbia's real estate market is diverse, with micro markets offering unique opportunities. Key regulations include rent control, Bill 44 for multiplex zoning, and the foreign buyer ban. Understanding these can reveal hidden opportunities. Prices have grown significantly, averaging a 6.3% annual increase since 1990, despite recent volatility. Strategic entry points exist for informed investors. Emerging cities like Kelowna and Kamloops offer lower entry prices. Bill 44's multiplex upzoning creates value-add opportunities. Post-short-term rental restrictions increase long-term rental inventory. However, higher interest rates compress cash flow, and strata rules may restrict rentals. Always verify these factors before investing. Deal analysis and buffer planning are crucial as rates normalize. In months 3 to 5, define your strategy: buy and hold, house hack, or multiplex. Choose your target city and neighborhood based on cash flow. Set criteria like price range and property type. Engage with local investor groups for insights and attend open houses for practice. Assemble your power team, including a savvy mortgage broker, British Columbia-specific lawyer, and trusted home inspector. In month 12, finalize your purchase with your lawyer, ensuring all closing costs are reviewed. Photograph the property before tenants move in and set rent based on market rates. Screen tenants using British Columbia guidelines and establish a dedicated bank account for rental transactions. Join an accountability group to prepare for your next investment. Explore creative financing strategies like vendor take-back mortgages, joint ventures, and registered retirement savings. Plan home buyer's plan. Consider a home equity line of credit for leveraging equity or house hacking by living in a multi-unit property. Understand these options to invest with less capital. For non-owner occupied properties, a 20% down payment is required, qualifying at the stress test rate. Self-employed investors face unique challenges in securing investment mortgages. 2 years of stable income documentation is crucial. Engage a mortgage broker specializing in self-employed buyers. Budget 2 to 4% of the purchase price for closing costs, including property transfer tax, legal fees, and inspections. These costs are vital to consider before committing to a property. To analyze a real estate deal, start with calculating gross rental income. Apply a vacancy rate of 3 to 5% for British Columbia markets. Calculate all expenses, including mortgage, taxes, and insurance. Determine net operating income, NOI, and subtract mortgage payments to find cash flow. Finally, calculate cash-on-cash return on investment by dividing annual cash flow by total cash invested. The cap rate for this property is 5%, with an effective gross income of $43,320 after accounting for a 5% vacancy. Key expenses include property taxes, insurance, and maintenance reserves. A realistic cash-on-cash return on investment is 3.2%, with annual cash flow at $4,764. Ensure you have a risk buffer for vacancies and unexpected repairs. Explore British Columbia's investment markets beyond Metro Vancouver for better returns. Consider Kamloops for affordability and cash flow, Kelowna for growth potential, and Prince George for high cash flow. Use tools like rentals.ca, bkassessment.ca, and CMHC reports to analyze markets efficiently. Visit jencorrigan.com for a 2-minute deal analyzer. Avoid buying in unfamiliar markets without understanding local dynamics. Always conduct a professional inspection to uncover hidden costs. Don't underestimate expenses. They are typically between 35 to 45% of gross rent. Detach emotion from analysis. Numbers must justify the purchase. Run numbers before visiting properties. Never skip inspections and research markets thoroughly before investing. Real estate investing requires a team, so engage a mortgage broker, lawyer, accountant, and mentor as part of your risk management. Avoid setting initial rent too low under British Columbia rent control. Commit to a buying window for accountability. Research market rents, and set your rent competitively to ensure long-term profitability. To kickstart your real estate journey, follow this 30-day checklist. Analyze deals, decide on a strategy, and narrow your target geography. Set criteria, track spending, and calculate net worth. Engage with mortgage brokers, lawyers, and accountants. Join investor communities and book a strategy call. Remember, action transforms information into success. If you'd like help brainstorming ideas for your unique situation, book a strategy call with me and watch my free webinar at jencorrigan.com/webinar. Also, schedule a pre-approval meeting with your mortgage broker, attend an open house to check out your local market, and set up a savings account for your down payment. And lastly, commit to owning an investment property by a specific date. Success in real estate is about decision and action, not luck.